Imagine a company whose entire future, its very survival, really hinges on a single upcoming data release.
Mm-hmm.
Is it about to revolutionize Alzheimer's treatment and just, soar? Or will it join that long list of cautionary tales in the graveyard of neurotherapeutics?
Right, that infamous graveyard.
This isn't just hypothetical. It's the high-stakes question facing investors today
Yeah.
and the market. It's already reacting dramatically.
Oh, yeah. Just this morning, the stock exploded. What was it, over 72% in pre-market?
Exactly. From $7.37 to over $12.68 a share.
Okay.
It's huge.
It's an astonishing surge, yeah, especially because it happened before any actual trial results were, well, publicly known.
Right.
This immediate, almost violent reaction really spotlights the extreme polarization, how divided people are leading up to this pivotal moment.
Precisely. And that's why we're here. Today, we're taking a deep dive into INmune Bio, Inc., ticker INMB.
INB, got it.
It's a clinical stage biotech company, and our mission is to cut through the noise, distill the expert analysis, and give you the core insights on its business, leadership, financials, market pulse, ownership, and of course, the significant risks.
All anchored to today, June 27, 2025. Because the timing is everything here.
It really is. The big reveal for their Phase 2 mindful trial in early Alzheimer's disease is set for Monday, June 30th. So yeah, get ready for a potentially wild ride.
Buckle up.
So to understand the true nature of this high-stakes bet, we first need to dissect INmune Bio's core business. Okay, let's unpack this. Chapter 1, business analysis.
Right. What's critical to understand, first off, is that as a clinical stage biotech, INmune Bio operates without a single product sale today. Nothing.
Zero revenue from products.
Exactly. Their entire existence is a bet on tomorrow, funded almost entirely by capital raised from investors like you through equity sales.
So success isn't measured in quarterly profits right now.
No, not at all. It's measured in scientific milestones. Future revenue, if it comes, would be from things like milestone payments, maybe royalties if they license a drug out, or direct sales if they build their own commercial team way down the line.
And they're not putting all their eggs in one basket, are they? They have other programs.
They do.
Yeah.
They absolutely have multiple shots on goal with 3 distinct platforms, which is good.
Right.
Their lead candidate, and the one everyone's watching like a hawk right now, is DNTNF, or XPro.
XPro, that's the Alzheimer's one.
That's the one, targeting early Alzheimer's disease, mild cognitive impairment, MCI, and also treatment-resistant depression. The upcoming June 30th data is specifically for that Phase 2 mindful trial in early AD and MCI.
Okay, what else?
Beyond that, they have natural killer cell priming, or INmune. That's in Phase 2 for metastatic castration-resistant prostate cancer.
Prostate cancer, okay.
And finally, mesenchymal stromal stem cell, or CORD-STROM. This one's for a rare genetic skin disorder called recessive dystrophic epidermolysis bullosa, or RDEB.
RDEB.
Yeah, and CORD-STROM has actually completed a blinded randomized trial already. They're planning a biologics license application, a BLA filing, in early 2026.
That CORD-STROM program sounds like it could be pretty significant even beyond treating that specific rare disease. Strategically, I mean.
It is, strategically speaking, yeah. This program has both rare pediatric disease designation and orphan drug designation from the FDA.
Which means?
That's significant because it makes it eligible for a priority review voucher, a PRV, upon approval.
A PRV, okay, what does that do?
Think of a PRV as like a golden ticket that lets any future drug from any company get an expedited 6-month review from the FDA instead of the standard 10-month or longer.
Okay, so faster review.
Exactly. And these vouchers are tradable. They can be sold for, well, often over $100 million.
Wow, okay.
For a company of INmune Bio size, that's a crucial potential source of non-dilutive funding cash without having to sell more shares and dilute existing investors.
Got it, non-dilutive. That's key. Now, speaking of size, where do they fit in the broader market? They seem small.
They are. Before today's incredible surge, INmune Bio was definitely small cap, arguably even micro cap, market cap, around $153 million.
Tiny.
Yeah. Even after rocketing to roughly $250 million today, it's still firmly in the small cap range. They're a niche innovator focused on harnessing the patient's own innate immune system.
And their main selling point, their value proposition.
It's precision medicine. They're aiming to correct the underlying biological dysfunction, not just mask symptoms like some older drugs.
And for XPro, that precision is really their main differentiator, isn't it?
It's absolutely vital. The crucial distinction with XPro is its targeted anti-inflammatory approach.
Okay.
Think of it like this. Inflammation isn't always bad. There's a bad cop version that drives disease and a good cop version that's protective. XPro is designed to disarm only the bad cop. Specifically, it selectively neutralizes only the bad pro-inflammatory soluble TNF or sTNF while sparing the good neuroprotective transmembrane TNF or TMTNF.
Leaving the good stuff alone.
Exactly. This precision is what makes it potentially safer than older, non-selective TNF inhibitors,
Right.
which often can't be used in neurological diseases precisely because they block both types.
Right, okay. Now let's widen the lens a bit. Look at the industry, the Alzheimer's market. It's huge, right? And growing.
Oh, it's enormous. Projected to explode from maybe $4.3 billion this year, 2025, to somewhere between, say, $10 billion and almost $20 billion by the mid-2030s.
Wow.
But here's the really interesting insight. It's not just the size. There's a scientific shift happening. For years, the focus was almost entirely on amyloid plaques.
Yeah, Leqembi, Aduhelm.
Exactly. But now there's this growing recognition that neuroinflammation, exactly what INmune Bio's XPro targets, is a critical driver of the disease.
It was right into their hands.
It potentially shifts the playing field dramatically in their favor if their science holds up in these trials. That's the big if.
Right. Huge opportunity, but I imagine the competition is fierce.
Intense is the word. You have the giants like Eli Lilly and Biogen dominating with their anti-amyloid drugs. But there's also a whole new wave of biotech companies like Vigil, Alector, Ceravance, also targeting neuroinflammation just through different pathways.
So how does INmune Bio stand out?
Their competitive moat, they'd argue, is XPro specificity, that selective targeting we just talked about. It's potentially a first-in-class approach.
And the regulators. The FDA.
The FDA has shown some willingness for accelerated approval pathways for Alzheimer's drugs, which could definitely benefit INmune Bio if the data is compelling enough.
But the barriers to entry here, they're huge.
Yeah.
That graveyard reputation isn't for nothing.
Absolutely. The science of Alzheimer's is just immensely complex. The failure rate for drugs is notoriously high.
Inexpensive.
Hundreds of millions for trials. Plus, you need strong intellectual property, which INmune Bio seems to have with its patent estate around the DNTNF platform. It's a tough, tough space.
Okay, now let's shift focus to the team steering this ship. Here's where it gets really interesting. Chapter 2, Management Evaluation. Because in biotech, leadership can be just as critical as the science itself, right?
Absolutely. And what's compelling here, I think, is the deep and long-term commitment of the leadership team.
How so?
Well, the co-founders, Dr. Raymond Tessie, David Moss, Professor Mark Lodell, they've been involved with this core science for a very long time. Dr. Tessie was even CEO of a prior company specifically set up to develop XPro 1595.
Wow, okay. So real dedication.
Yeah, and their VP of neuroscience, Dr. C.J. Barnum, has worked on it for over a decade. This isn't just a team that jumped on a trend. It suggests profound conviction, a genuine belief in the science they're developing.
That kind of long-term focus is pretty rare. What about transparency, ethical conduct?
Seems standard, you know. They maintain an active investor relations presence, put out press releases for key developments, hold quarterly earnings calls.
The usual stuff.
Yeah. They have a code of ethics, insider trading policy, no reported history of ethical scandals or anything like that. Appears to be a well-governed company on that front.
Okay. And in terms of capital allocation, for a clinical stage biotech that's pre-revenue, it's pretty straightforward, I guess.
It is, yeah. Simple story there. Their capital allocation is clear. Almost all the money raised goes directly into R&D.
Funding the trials.
Exactly. Funding those critical, expensive clinical trials. Just look at Q1 2025. R&D expenses were $7.6 million, more than triple their G&A, their administrative costs, of $2.3 million. Shows where the focus is.
Right. Purely science-driven spending.
Pretty much. There's no strategy to acquire other companies. The focus is purely organic pipeline development. And as you'd expect for a company burning cash for research, they've never paid a dividend, no history of share buybacks. That's the right approach for them at this stage.
So metrics like return on invested capital, ROIC, probably not very useful here.
Totally useless, actually. Their ROIC is deeply negative, like Megatron 136%. For a pre-revenue company like INmune Bio, that metric is functionally meaningless. There are no profits yet. The real measure of return will be, years down the line, the future clinical and commercial success or failure of their drugs.
Okay, makes sense. So what does this all mean? Let's dig into the actual numbers. Chapter 3, financial analysis.
Right. So key metrics, market cap. Before today's surge, it was around $145, $150 million. Microcap territory, high volatility, high risk baked in.
And now, after the pop.
Now it's around $250 million. Still small cap, but significant jump. Revenue growth trends? Well, like we said, they're effectively pre-revenue.
Any tiny bits of revenue are just grants, not sales.
Exactly. The financial story is really about escalating costs as they push drugs through these expensive trials. You see rising net losses year over year, $27.7 million in 2022, $30 million in 2023, $42.1 million in 2024.
That's a steep climb in losses.
It is. It reflects the cost of running bigger, later-stage trials, especially mindful.
So traditional profit methods are also out the window. What metrics do matter here then? Cash burn.
Yeah, cash burn is key. All traditional profit margins are, astronomically negative, not helpful. Focus on the net loss, the cash burn. A net loss of $9.7 million in Q1 2025 implies an annual cash burn rate of roughly $39 million.
$79 million a year.
Yep. And free cash flow. Consistently, increasingly negative, mirroring those rising R&D costs. Again, expected and necessary for development, but you have to watch it.
Okay. What about financial stability? Debt.
That's actually a positive point. Their debt-to-equity ratio is exceptionally low, like 0.01.
Almost zero debt.
Right. They're financed almost exclusively through selling equity, not borrowing money. That means no costly interest payments hanging over them.
And their ability to cover near-term bills. Current ratio.
As of Q1 2025, their current ratio was 2.64, generally considered healthy. Suggests enough liquid assets to cover obligations for the next year or so. Dividend stability, obviously not applicable.
Right. Okay. Valuation. This is where it gets really tricky for biotech. PE ratio is meaningless.
Completely meaningless with negative earnings. And even a standard discounted cash flow, a DCF model, doesn't really work well, does it?
Why not?
Because it doesn't properly account for that massive clinical failure risk we keep talking about. The chance the drug just doesn't work.
So what do analysts use instead?
The industry standard is a risk-adjusted net present value model, an RNPV.
RNPV. Okay, break that down.
Okay, think of it like placing bets on a series of hurdles the drug has to clear, phase 2, phase 3, FDA approval. You forecast the potential future cash flows, if the drug is successful, way out in the future.
The best case scenario cash flow.
Right. But then, crucially, you multiply those potential cash flows by the statistical probability of the drug actually succeeding at each remaining stage. And those probabilities, especially in neurology, can be painfully low.
So you're heavily discounting the potential based on the odds of failure.
Exactly. Then you take that risk-adjusted cash flow stream and discount it back to today's value using a high discount rate to reflect the overall riskiness. It's a way to put a dollar figure on a highly uncertain scientific gamble.
Okay, it's complex, but it tries to factor in the science risk. So applying this RNPV concept, just as an illustration, what kind of value range might an educational model suggest? Just the X-Pro Alzheimer's opportunity.
Yeah, and I have to stress this is purely an educational model to show the concept, definitely not a price target or investment advice.
Understood. Educational purposes only.
Okay. Focusing solely on X-Pro and Alzheimer's, using some reasonable, maybe even conservative assumptions. Such a model might suggest a potential intrinsic value for INmune Bio in the range of, say, $14 to $18 per share.
$14 to $18. Interesting. Given where it traded before today and where it is now pre-market, what are the key assumptions driving that specific range?
Okay, so the big ones are a peak market penetration assumption. We used a conservative 5% of the early AD market, an assumed annual price of $30,000 in the US, a discount rate of 15%, reflecting the high risk.
And the probabilities, the risk adjustments.
Crucially, the probability of success going from phase 2, where they are now, to starting phase 3 was assumed at 30%.
Only 30%. That seems low, but maybe realistic for Alzheimer's.
It's within the historical average range, but yeah, it reflects the high failure rates in neurology. Yep. Clearing phase 2 is incredibly challenging. And then from phase 3 to getting actual FDA approval, we assumed 55%.
And that 30% phase 2 hurdle is exactly what Monday's data is all about.
Precisely. The data release on June 30th will directly speak to that 30% phase 2 success probability. That's why it's so absolutely pivotal for the company's valuation, however you model it.
Okay, so with all that context, the business, the management, the financials, the valuation challenge, let's talk about how the market itself is feeling about INMB. What's fascinating here is Chapter 4. Market sentiment.
Right. Market perception. Wall Street analysts, the ones covering the stock, they're decidedly bullish. The consensus rating is basically strong buy or buy.
And their price targets.
The average one-year price target is around $23.67. That implied significant potential upside from where the stock was trading before today's massive pre-market jump.
And speaking of that jump, that 72% surge today, what exactly sparked that? It wasn't the data itself.
No, it was the announcement of the firm Mindful trial data release date. Just confirming
Wow.
it would be Monday, June 30th.
Just nailing down the date caused that.
Yeah. Investors knew it was coming second half of June, but putting a firm date on it forced everyone's hand, you know? Bulls who wanted in before the news, bears who needed to cover shorts just in case. It created this classic catalyst run-up.
Ah, the run-up into the event.
Exactly. Short sellers maybe got nervous, started covering positions, creating intense buying pressure. Media coverage has mostly been factual, just anticipating the high stakes.
You mentioned short sellers. What's the short interest situation here? Because I've heard it's pretty extreme.
It is. It's genuinely one of the most defining characteristics of INmune Bio right now. As of late May, something like 6.18 million shares were sold short.
Okay. How much is that relative to the shares available at trade?
It represents an exceptionally high 44% to 48% of the public float.
Wow, nearly half the float is short.
Yeah, it makes it a classic battleground stock. There's a profound disagreement here between the bulls, who believe in the science and the potential, and the bears, who are betting heavily on failure.
And that incredibly high short interest sets the stage for a potential short squeeze, doesn't it, if the news is good?
It absolutely does. If the trial data on Monday is positive, all those short sellers will rush to buy back shares to cover their losing positions. That rush could create intense buying pressure, sending the stock soaring even higher than it otherwise would.
The shorts covering fuel the rally.
Precisely. Conversely, of course, negative data would likely lead to a dramatic collapse, as the shorts would be proven right. The days to cover, which measures how many days of average trading volume it would take for all shorts to cover, is also very high, over 20 days. That amplifies the whole dynamic.
So a very volatile setup. How did the stock look technically before today?
In the weeks leading up to this, the stock was actually showing bearish momentum. It was trading below its key 50-day and 200-day simple moving averages.
But today it changed that picture completely.
Dramatically. Today's surge to over $12 catapults the stock way above both averages. For technical traders, that signals a powerful potential bullish reversal.
Okay. If we connect this to the bigger picture,
Yeah.
let's explore who actually owns this company. Chapter 5. Ownership structure.
Right. Stakeholder analysis. Institutional ownership, meaning big funds, pension funds, etc., is relatively low, only about 29.7%.
That is quite low for a public company.
It is, and it's primarily composed of large passive asset managers and index funds like BlackRock and Vanguard, who often have to own stocks just because they're in an index. There is one notable active holder, Praetorian PR LLC.
Okay, so institutions aren't heavily involved. What about insiders, management directors?
Now, that's the stark contrast. Insider ownership is exceptionally high at 28.90%.
Wow, nearly 30% owned by insiders.
Yeah. This means the company's founders, executives, and directors have a huge chunk of their personal wealth tied directly to the company's success. Real skin in the game.
And what's even more telling is their recent activity, isn't it? Buying or selling.
It is incredibly telling. Over the last 12 months, there have been 0 open market sales by insiders.
So selling it all.
None reported on the open market. There have been multiple open market purchases by top executives, the CFO, the CEO, and a director, all bought shares with their own money.
Buying shares ahead of this big data release, that signals confidence.
It signals strong conviction, absolutely. So this paints a really clear picture. You've got concentrated belief in buying from insiders who have the best information and the most skin in the game. Versus a very skeptical crowd reflected in that low institutional participation and the massive short interest. So it presents a clear choice for you as a potential investor. Whose analysis do you trust more? Which side do you align with?
That really frames the dilemma. Which brings us to a crucial point. This raises an important question. Chapter 6, risk assessment. We need to systematically look at the risks.
Definitely. Let's use a SWOT framework: strengths, weaknesses, opportunities, threats. Starting with strengths.
Okay, strengths.
First, the novel scientific approach. That unique, potentially first-in-class mechanism of selectively inhibiting only the bad soluble TNF. That's a core strength if it works.
Right, the scientific differentiation.
Second, the experienced and invested management. We just talked about them, founding team with over a decade of dedication, super high insider ownership, recent buying, signals strong alignment.
Okay.
And third, the diversified pipeline. Even though all eyes are on X-Pro right now, Having 3 distinct platforms does provide multiple shots on goal, mitigating that single asset risk somewhat.
Okay, those are compelling strengths. What about the weaknesses?
The weaknesses are significant too. First and foremost, their pre-revenue status and financial dependence. They generate no meaningful revenue, rely entirely on capital markets for funding.
Which leads
to the second weakness. High cash burn and limited runway. Those increasing net losses, burning roughly $39 million a year now. Their Q1 2025 cash position of $19.3 million was projected to fund operations only through Q3 2025.
So they need money soon. Very soon.
Very soon, yes. That necessitates further financing. And third, despite the pipeline diversity, there's overwhelming near-term concentration risk. The company's valuation, maybe even its survival, is hugely dependent on the binary outcome of this one study, the XPro Mindful study.
Got it. Weaknesses are clear. What about opportunities? There must be huge potential if it works out.
Absolutely. The biggest opportunity is the massive unmet medical need in Alzheimer's. A successful drug here offers genuine blockbuster sales potential. Billions.
The holy grail of biotech.
Pretty much. Second, platform validation and expansion. If XPro data is positive, it doesn't just validate this one drug, it validates their whole STNF targeting platform, potentially opening opportunities in a wide range of other neuroinflammatory diseases.
Okay, broadens the potential significantly.
And third, that opportunity we mentioned earlier, non-dilutive funding via PRV. If the Kortstrom program gets approved, selling that priority review voucher could bring in over $100 million in cash without selling stock. That's a big opportunity for a company this size.
Okay, strengths, weaknesses, opportunities.
Mm-hmm.
Now, the threats. What could derail this whole thing?
The single greatest threat, bar none, is binary clinical trial risk.
The mindful data itself.
Yes. Alzheimer's drug development is infamous for failures.
Yeah.
A negative or even just ambiguous or inconclusive outcome for mindful would likely be catastrophic for the stock price.
Game over potential.
Or at least a massive setback. Second threat, intense competition. We talked about the big pharma players and other biotechs. It's a crowded field. Third, financing risk. They will need more capital, especially if mindful is positive and they need to fund a huge, expensive phase 3 trial. If the data isn't compelling or if markets are bad, raising that money could be very difficult or highly dilutive to existing shareholders.
Makes sense. What about broader economic factors?
Yeah, key macroeconomic factors matter. Persistently high interest rates, increased discount rates, which inherently hurts the valuation of long-duration assets like pre-revenue biotech stocks. Inflation increases their operating costs, accelerating that cash burn.
And any specific geopolitical risks, like those new tariffs?
Yeah, the impact of specific geopolitical factors like the U.S.-imposed tariffs of 2025. These represent an indirect but potent threat.
How so?
Well, broad tariffs, say 10–25%, on imported materials needed for global clinical trials directly increase R&D costs. That shortens their financial runway. Plus, the economic uncertainty created by tariffs tends to make investors more risk-averse, especially towards speculative sectors like biotech. This increases the cost of capital, particularly disadvantaging smaller companies like INmune Bio that rely on it.
Right, it makes funding harder and more expensive. Okay, that's a thorough risk assessment. So let's conclude our deep dive with Chapter 7. Conclusion. Let's try to synthesize all these findings.
Okay, so boiling it down. The bull case rests on really compelling, novel science that's selective STNF targeting. Huge market potential in Alzheimer's. It's a classic high-risk, high-reward proposition.
Supported by?
Supported by that experienced, deeply invested management team with massive insider ownership and recent insider buying. And you have the buy consensus from Wall Street analysts, for what that's worth.
Okay, that's the bull case and the bear case.
It's equally potent, really. INmune Bio is pre-revenue, high cash burn, definitely needs more financing soon. Its near-term future hinges almost entirely on one binary clinical trial outcome in a field, Alzheimer's, that's just littered with failures.
And the market reflects that bear case how?
Through that exceptionally high short interest, you have a large, sophisticated group of investors actively betting heavily on failure. That's a powerful countersignal.
So summarizing the valuation picture, that RNPV model.
Right. Our educational risk-adjusted net present value model, just trying to quantify the XPro Alzheimer's opportunity, suggested a potential intrinsic value range of $14 to $18 per share. But again, huge caveat. This is an educational model, not a prediction, not advice. The valuation is acutely sensitive to all the assumptions, especially that probability of clinical success.
That 30% phase 2 hurdle number is key.
Absolutely critical.
So as of today, June 27, 2025, with INmune Bio's pre-market share price already way up over $12. What's the concluding outlook?
Well, the current price, north of $12, clearly reflects significant optimism already baked in ahead of the data. The stock is no longer just a simple bet on a positive outcome.
What is it then?
It's now arguably a bet that the data revealed on June 30th will be compelling enough, strong enough to justify this already higher valuation and potentially propel it even further. The market has pulled forward a lot of the potential good news.
So the bar is higher now because of the run-up.
Exactly. Ultimately, the value of INmune Bio won't be determined by market sentiment or analyst models or even that strong insider conviction. It's going to be determined by the cold, hard, scientific data that comes out on Monday.
It really boils down to the science.
It does. This investment case is a quintessential high-risk, high-reward proposition. The potential for a home run is massive, but it's matched only by the potential for a complete strikeout.
A true binary event. As we await those results on Monday, June 30th, maybe the question for you, the listener, is, what specific piece of data or insight from that release would make you reconsider your perspective on INmune Bio, one way or the other?
Yeah. What data point shifts your conviction?
That's a powerful question to leave with. Before you go, please remember to like and subscribe to the Stock Analytics AI YouTube channel. Members get priority deep dives on tickers. We're covering all of the S&P 500 stocks over the next few months, and members get exclusive priority access for just €4.99 a month.
And if you just want a one-off deep dive on a specific stock,
Just drop us a super thanks. Members can also add stock suggestions for future deep dives right there in the comments. And the important disclaimer. Yes, absolutely. Please note, this analysis was generated by an AI system purely for educational purposes. It should absolutely not be considered financial advice. Always, always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.